We're seeing a lot of activity in Brazil.
Okay.
We're seeing a lot of activity in the Middle East. I see a lot of activity in Turkey also. Some of these institutions are using it for cross-border settlement, but settling their invoices, overseas. We did have the Genius Act passed recently.
Yep.
There's a talk of the reciprocity in the bill. Does that mean Singapore's in play? Does that mean Hong Kong's in play?
Meet Jason Lau, Chief Innovation Officer at leading crypto exchange OKX. He started in TradFi at Barclays and moved on to OKX almost a decade ago, drawn to the mission of OKX to be the new money app and give access back to the people. His first experiment with the stablecoin product, OKLink, was a failure. Wrong timing. But in 2025, the stars are aligned for stablecoin to truly take off. We are now watching an exciting race to see where stablecoin adoption will be turbocharged by sound regulation. All eyes are on which of the leading stablecoin will win the battle for dominance. Find out which one has already the highest revenue per employee, and how stablecoin could become the new gold standard in global trade. So, Jason, it's good to have you here.
Good morning. Thanks for having me.
Okay. You've been working for OKX for almost 10 years now, right?
Almost 10 years, yeah.
Yeah. Okay. So before we talk about your journey in OKX, can you tell us a bit more, like how did you get into crypto and OKX?
Seems like a long time ago, but I used to work in TradFi. I used to work at Barclays. After that, I moved to the Bay Area to work on a startup. This was in the crowdfunding space.
When was that?
That was 2014-ish.
Okay.
Didn't work out.
Yeah.
But was fortunate enough to go to all these meetups, activities around Bitcoin at the time in the Bay Area. That was pretty exciting and very interesting, intellectually.
What kind of the people you meet at those events?
These are techies, cyberpunk people.
No finance people, right? Back then, still.
Not quite. I mean, this is the Bay Area. This is tech central, right? So, but you got to meet some pretty early Bitcoiners.
Okay.
Talking about the possibilities of crypto, talking about the possibilities of what Bitcoin would mean. It's funny because, you fast forward 12, 13 years now, a lot of things that we hoped might play out actually turned out to be true.
Okay.
Most notably, sovereign states also embracing Bitcoin, right?
Yep.
That was sort of like the dream end goal for a lot of the community. So yeah, I mean, I got it. Exposed, got interested.
Okay, so that was a big shift for you, I guess.
Look, it was a shift. It was a risk. This was end of 2015 when I took that step. But I did agree to help our company open up our first international expansion into Hong Kong.
Okay.
So this was early 2016 when I joined. Came over to basically set up and work with our Hong Kong team and set that up and grow that. And then, seeing that process where we eventually internationalize and globalize, and now we operate in, we have people on the ground in over a dozen countries, right? So
at that point when you joined, how many people were OKX?
I think there were about 50 is my guess.
Oh, only 50?
50
Wow.
people, yeah.
And what kind of business OKX was doing at that point?
We were a crypto trading platform, servicing...
How many coins were listed at that point?
At that time, 2.
Bitcoin?
Litecoin?
Not even Ethereum?
No, pre-Ethereum, yeah.
Oh shit, okay.
Yeah.
So
early
that was
days
really
for sure.
the beginning. That was really the
Early
beginning.
days for sure. It was actually, I don't know how familiar you're with crypto history, but 2014, 2015 was really quiet years for Bitcoin and Litecoin at the time.
Yeah.
Ethereum was just an idea and picking up and coming to market. And so, yeah, it was very quiet.
Yeah.
Just for context, in terms of price, 3-digit, right? Bitcoin was in around 3 digits at the time, maybe $200, 200 something. So, yeah, it was, an interesting time where we were, when I joined, actually, one of the first, I talked about coming to help us expand to Hong Kong, but also build out some, hopefully, new products that would spur usage of Bitcoin, spur usage of crypto.
So what's the first product you worked on?
We worked on something called OKLink,
Okay.
which was using Bitcoin really as a settlement layer for financial institutions cross-border. Still a problem that people are trying to solve today, and I'm sure we'll touch upon how stablecoins affect that. But back then, stablecoins were new, not really well understood or adopted, and so and yet we got many. I think we had 200 companies on the network across 40 different countries. Obviously, Philippines and Indonesia, some of these corridors that are more heavily used for these flows. we saw a lot of activity there. But yeah, it was pretty cool to see different companies try to experiment and work with us on that.
But that wasn't successful in the end, OKLink, right?
Well, you know how crypto markets are.
Yeah.
2017 came and trading with the explosion of ICOs and new tokens, we just decided to focus our efforts on our core trading, our core trading product.
So it wasn't that it wasn't successful. It's just you make so much money on the trading side that basically.
I think it was a decision. It was a decision to be made, right? Like you have to focus on, and it ties into the context of we were experimenting also during that 15, 16 period to see how can we get more people to use crypto, and it turns out trading, all that stuff was what people actually gravitated towards.
Basically, the coins, the futures, the perps,
a lot
all
new coins, new product. Well, perps and futures already existed at that time, but with the proliferation of new coins, a lot of interest in new coins, I think that led to the trading products related to that.
Yeah. And originally, what was the use case for the stablecoin? What people will create these stablecoins? So I think you talked about remittance, but that was not the main use case, right? To start with.
I think stablecoins found its first real use case as a trading hedge, right?
Yep.
Just as a place to park assets when you're not in the market. The crypto industry has had a rocky relationships with the traditional banking industry in particular, and so it's always been hard to establish and maintain solid banking rails, especially dollar rails and dollar bank account. And so I think very quickly we saw stablecoins, especially as the markets grew, trading activity grew. We saw sophisticated clients really use stablecoins as that hedge to balance out their portfolio. Even though Tether was founded
2014,
and so
USDC 2018.
It took quite some time. So Tether's been in the market for 11 years now.
Yeah.
And yet a lot of people have just heard about it, right?
Yeah.
It's one of those classic overnight successes that took 10 years to come about. And so you kind of see the acceptance, the adoption, the awareness of stablecoins play out over the years.
So the first use case is you said, if I have some position Bitcoin, I think markets get tank, I sell Bitcoin, switch to USDT or USDC, and I get parked USDT somewhere, right?
Yeah.
I think there's another use case also for people who does arbitrage. They move USDT across exchange much faster.
Yeah.
Right?
Yeah.
So are these two main use cases were trading at the beginning of stablecoin?
Yeah. I mean, most of the crypto activity in those early days were centered around trading,
just purely for that,
speculation. I mean, like I did mention, there were the payments use cases, the remittance use cases, but I think comparatively speaking,
it was very small.
Still small, and still small today, right?
Yeah. So you talk about how you joined OKX first to set up the office in Hong Kong to build some product, but I think your role evolved over time, right? OKX as a business also evolved. Can you tell me more how it has changed over the last 9 years?
When I joined, it was 50 something people. Today we have 5,000 something people.
Okay.
So I mean, just in terms of
100x,
that, it's grown quite a bit. We operate now in more jurisdictions. We have more offices. We're getting licensed in more of these places.
Yeah.
And so I think the nature of the industry itself has matured quite a bit. I mean, a lot of it is policymakers, regulators, other stakeholders, banking partners, understanding that there is a difference between good players in the industry and maybe bad actors in the industry. And so that maturation process kind of allowed us to also evolve with the industry and grow and really, deliver a more comprehensive suite of products for trading use cases, but also, a lot of people, we're sitting here in Hong Kong where we do have access to pretty sophisticated financial products, but there are a lot of people around the world that don't. And so a lot of people actually use crypto products as their, financial portfolio, their hub. And so, allow us to deliver products like that to help people manage their savings, their wealth, their daily use cases. One interesting story is that when I first moved back to Hong Kong 2016 for OKX, we went around talking to all the regulators here.
SEC?
To just try to explain, hey, look, we'd like to get a license, right? We were doing the OKLink product. We think we're moving There is some value. We're helping people move value. Can we get a license? And the answer was always no. That's out of scope.
What that means? I mean, you don't need a license.
You don't, because it's not.
So anyone can do whatever you want in Hong Kong.
Right. Back then, as you saw, a lot of companies actually, a lot of crypto companies were set up in Hong Kong. Not necessarily to take advantage of that, but just because it was a gathering point for entrepreneurs here. It was interesting that attitude where, don't talk to me. It's out of my scope. Go talk to someone else, right? And then eventually legislation came about, which brought it in scope. Yeah. And now you see licenses and frameworks built.
That's really funny because I think that's characteristic of Hong Kong government, right? It's like laissez-faire. You can do whatever you want. But at some point, if the thing becomes too big, people start to lose money. Say, well,
but Hong Kong's an example of what's been playing out around the world, where, again, regulators, policymakers are understanding the importance of crypto and want to embrace it, frankly. I remember going to Malta in 2018, EU, right? And they had a big banner that said, welcome to the blockchain island. That was their branding. And they wanted to really position themselves as welcoming for crypto entrepreneurs and companies. And so, fast forward today, we're licensed in Malta. It's a MiCA license that is passportable across EU, and we service a lot of users. We have a few hundred people out in Malta now, right? So I think it's interesting how different countries have taken their journey, but eventually it seems like everyone's converging around sensible frameworks and policies around crypto.
So OKX from the day one has been very sensitive about making sure you're compliant to set up an entity in different jurisdiction to get the license, right? Mm-hmm. And as your role at that point was basically to open office in certain location, I believe you went to US
a little
first,
bit,
right?
yeah. So I moved to the US in 2018 to help set up our US business there, and now we're in 40 plus states. It's US is interesting, right? Obviously, we've also seen
what's happening right
legislation and policy changes there. So again, I think if you just zoom out, it's part of the broader trend where that pushback probably from incumbents has kind of died down, and now we're seeing this embracing of crypto broadly.
Yeah. So what kind of project or products you guys have been working on that you're most excited about? Do you think those actually make the biggest impact, the biggest change?
OKX, I think our core focus is to deliver increased access to crypto, right? Like that's fundamental to what we do. So all of our products gravitate around that. We also want to make sure we build products that are transparent. And we want to encourage people to use crypto also. And by using crypto, what does that mean, right? Like some of the
when you say people, do you mean businesses or do you mean retail?
Yeah, retail and institutions. Obviously, we service 100 million users around the world today, and that includes both institutions.
What's the makeup?
Well, I mean, by count, it's obviously going to be
retail.
A lot of retail, but by activity, institutions do a lot of trading, they do a lot of hedging, they do a lot of...
So what's the percentage in terms of volume?
I don't have the latest numbers on that.
Is it 50-50? It's just
no, I wouldn't say it's that much. Probably 30% institution maybe.
Oh, okay. 30, so still predominantly like retail. Okay, 70 retail.
No, absolutely. 30, yeah. I mean, crypto at its core is a product for people like you and me. Right? There are, I'm sure we'll dive into it, but there are ways where institutions and businesses can use crypto to make some processes more efficient and things like that. But really fundamentally, it's this access to an asset, it's an access to a system that you normally would not have that access to. And so we also push products that help people, encourage them to use crypto. And what that means for us is, crypto allows for self-custody, right? Meaning you can own and hold your own digital assets and you can transact in them. So we have a product called OKX Wallet, which is a self-custodial wallet, meaning you control it, you're responsible for it. You don't need permission from, say, someone else to be able to transact and do things with it. And
it also means that if I lose the seed phrase, I'm stuck.
Yes, but I think in this day and age, I don't think we're perfect, but we've gone to a state where there are ways where you can break up the keys, you can do things so that there are ways to recover, and depending on how you want to do it. But
is it set up exactly the same as MetaMask, meaning you have your own seed phrase, you control everything yourself, and if something goes wrong,
you can have that. So the way we built our wallet is you have choices when you set it up. So if you're very familiar with seed phrases, you're very familiar with key management, sure, you can pick that path. If you want help and you want to perhaps link it to your OKX account, for example, so we can help you store one part of it for recovery.
Oh, I see.
That's an option. If you don't want that, you can also maybe set it up as a multi-sig. You want to trust your kids or your wife or something. That's another podcast, but you can do that too. I think,
okay.
So I think for us, it's making sure users have the tools to make the choices they want.
Yeah. No, the reason I say I don't trust my wife doesn't say I don't trust my wife. More I don't trust her to know how to use it. And I think when I first bought BTC was 2021.
Okay.
And I bought a hardware wallet, and that's really cool. You have hardware wallets, you have the 24 C-Trades or CD-Wars, whatever, and then you set it, and within 1 year you forget everything, how to use it. And you know that if you get hit by a bus, there's no way your loved one can recover from this. So I thought that was the dumbest idea to do it. So it's true in theory, you have full control, but in practice, you just forget everything and then you lose access to it. So that's actually really not recommended in my opinion. And that's why I want to say Self-Custodial Wallet, yes, in theory it's a great idea, but in practice I think it's a pretty nightmarish way to control your money, your assets.
Yeah, and I think people are realizing that, right?
Yep.
There are products now where there's a company called Casa that splits up your keys. It's multi-sig. They keep one to help you in case of accidents or things like that. But they also have a inheritance feature whereby you've designated maybe someone.
Oh, really?
Yeah, so that they can, if God forbid anything were to happen to you, could approach the company to have them help her recover the whole setup.
So you can have a will process in the app itself. Really?
Something like I mean, it's not a legally binding thing. It's more like they will recognize the person that you've designated as a sort of.
Oh, I see. So it's more contractual. It's not.
Yeah, it's not a legal. It's not a will. It's just.
Okay. It's not like there's a will and then there's the executor who go. It's not that. It's really.
It's not a legal structure. Yeah.
Got it.
Although you probably could set it up in a way that encompasses that. You bring up a great point, though. I think even for digital assets, the property rights, there's been court cases and legal cases that have now started to really establish how that works, and it's recognized as property.
Yep.
With FTX, we saw we saw a lot of issues around, one, poor governance, but also two, not handling assets properly, right, and therefore.
Do you own bankruptcy? Do you own BTC or is it converted to USD at the moment of bankruptcy?
That bankruptcy estate, I think a lot of people took issues with on how they treated because they just, it was property of the estate as opposed to property of the customer, right? And so even today, there's just a lot of work to be done I'm only speaking about our side, to make sure that customer assets are segregated, that they're bankruptcy remote, they're legally protected in the case that, anything happened to our company, customers still have access. So I think it's part of this overall maturation of the industry over the past 10 plus years.
Yeah.
Hey, Zach in the editing room here. I realize that 76.8% of you have not yet subscribed to the Schelling Point. If you could just hit the subscribe button down below, it will really help us out and keep producing content like this. Thank you. Now back to the Schelling Point.
So I think you talk about one of the products that you're working on, which is OKX Wallet, the self-custody. What are the other things that you're working on?
We were just in Singapore, right? And there was a relatively big crypto event, and we announced OKX Pay launching in Singapore. What that means is allowing people to use their crypto assets, stablecoins, others, to go to any merchant that supports GrabPay and basically pay with their crypto.
Oh, wow.
Within the OKX app. So that's another example where we're trying to build ways for people to use the crypto, right? Crypto, stablecoins already in the OKX app, you can earn yield on it, you can obviously trade with it, you can do things with it. But now trying to tie it back to those real world day-to-day use cases, we're hoping to announce more of those things over the next few months in different countries also.
So let me understand. So OKX Pay, so let's say I have my OKX wallet, I have USDT in there or USDG or whatever flavor of USD stablecoin, then you'll connect to more and more payment facilitator in different countries, right? So in Hong Kong, it could be PayMe, it could be Alipay or WeChat Pay in China, whichever, right? And the idea is later on, using your crypto, your stablecoin, you can just natively pay this. And this conversion rate, I assume.
Yes,
Who does the conversion? Is OKX the conversion or?
It's either us or Grab or
someone is in the FX
flow. So when you scan it, it will show how much in the choice of stablecoin you chose, it will be deducted from your balance, and you can accept that.
Oh, that's great. So
Yeah.
that to extend the use case. And so the roadmap is how many countries you think accept that by the next 12 months? What's the roadmap?
We'll revisit that in 12 months. I think the challenge with these is, they take a long time,
Yeah.
right? Obviously, there's connectivity, there's a lot of regulation, there's a
Yeah.
lot of legal work to be done, but also making sure it works, right? Most importantly is the testing. I think,
The technical shouldn't be that hard, isn't it? Is it? Sorry, I'm asking maybe a dumb question.
I think it's making sure all the scenarios play out, right? Like I think you need to, when you're going to pay for a coffee,
Yeah.
something, that's a 1 second transaction that you don't want to think about.
Yeah.
And so it's just making sure it's tested thoroughly and making sure that there's no issues, right? Like there's always, you don't want to go and have to call us for, hey, why did it not work? You're sitting there waiting for your coffee, right? Like, so it has to be battle tested. I think that's the most important thing. And then obviously, like I mentioned, the regulations have to be clear because there is this transfer and transaction between the traditional systems and our systems in the crypto world.
Yeah.
We're also looking to expand into card products too, whereby, right, instead of scanning, maybe you just swipe your card, debit card or credit card, so that you can again deduct from your balance from your OKX account.
Going to
Yeah. Some of our friends in the space have already launched some similar products, but I think our approach is obviously making sure it works seamlessly within a whole suite of products. Right, we offer a full stack of products up and down the value chain, and so it's making sure that works really seamlessly.
Okay.
And again, battle tested, regulated product. So in 12 months, we'll see what new countries that will roll out in, but we've got some pretty exciting plans there. So can I ask you a question?
Yeah, sure.
Okay, so you guys, blockchain network for 5 years now.
Yeah, 4 years.
4 years. How have you seen the technology change?
I think when we first started, right, the idea was you have a ledger fabric. Over the last 5 years, I think the permission space, right, you have some adoption in China, some Chinese blockchain like Chang'an and these type of things for the permission based. Well, what I think right now today is there are new public blockchain that's actually quite interesting. But what I think is the technology now is also moving more interestingly to see how can you build blockchain infrastructure to support more use case that's at scale. Because that's the fundamental issue, which is it's not really scalable, right? The fact that you have to compete with other guys for space, for block space, is ridiculous. I don't want my project to be impacted by some guy trading crypto kitties. That makes no sense to me. And from GSBN perspective, I think what will potentially happen for us, you may have a sort of a hybrid approach where some of the things that we build on permission will remain permission because all network members trust it. But some other use case, we may actually want to be in the public blockchain. So that's also the reason that I'm very excited to have about a new CTO coming from Meta. And his mandate or whatever I asked him to do is let's review the infrastructure that we have to make sure that we can support all the use cases that we want to in the future. So how do I combine that? It's not doable. But in the meantime, since GSBN was founded and now they have trusted the execution environment, confidential, there's a new technology that come up. But combining the two is actually quite tricky.
What is the key use case that's trying to be scaled up right now?
It's electronic bill of lading. So essentially, in short, electronic bill of lading is the transfer title for global commerce.
Yeah.
And if you combine the two, then you have something that's completely alien, completely new, that doesn't exist before, where you can change both. And then that sounds very idealistic because the way of workflow, let's say, take an example. You have a shipment of iron ore from Australia to go to Qingdao, to China. There's many processes that happen. It's not just one payment, one title. It's much more complicated than that, right? There's the guy who's gonna test the quantity of iron in the iron ore. There's the lab test. There's a bunch of payments. Then there's a final test when you have a report of a loading in Qingdao. So all those steps is quite complicated. But to me, you can fully digitize that. It's programmable, right? And that's a very good use case for stablecoin plus EBL.
So EBLs are digital native titles, right?
Yes. Right. So to give some background, the tradition of doing bill of lading is piece of paper.
Right. Whoever owns the piece of paper owns
Correct.
the thing.
The title.
Okay,
yeah.
Got it. So these are bearer instruments, right?
Yes. So there's two types. There's bearers. There's also the one where the bill of lading would have a name. So you have to surrender, but the consent, those got straight BL.
Okay, so you have
negotiable
to pass.
Correct.
Okay, got it.
So it's a very archaic way of doing things, but it has been going on for hundreds of years.
Of course,
right?
that's
Yeah.
yeah.
But once you move that towards everything blockchain based, right, digital based, I think it's very, very interesting.
Well, that's exciting.
Any other innovation that you guys working on besides the wallet?
I think we might dive into the stablecoin stuff a little bit later, but we've been thinking a lot about how we can more deeply integrate stablecoins into our platform. Obviously, people use them for a lot of different use cases, but we want to make the experience a little bit more seamless. So, for example, today on OKX, you can earn 4+% on your USDG balance.
So USDG is, can you define
Is,
what USDG?
yeah, USDG is a one of the leading stablecoins out there. I think the ability to earn yield, which is almost a treasury rate today, and not necessarily have access to that, right? We talked about access to these products that you just can't, right? And you may not even be able to get dollar access if you're in a different country, and to be able to earn that risk-free rate is pretty powerful. So one thing that we recently launched is something called Autoearn, where previously you had to put it in your savings account within the OKX. Now, no matter where your USDG is, it will automatically earn yield. So we've sort of abstracted away the necessity to even put into the piggy bank, right? And so that makes it way more powerful because, say you're also an active trader, you want to use the USDG as collateral on your margin position. You can still do that, but at the same time also earn yield on the balances that you have committed. So we found that users have found that very, very
attractive.
Attractive, yeah. And again, that's just one example of how we're trying to build it deeper into our entire product suite.
I think you've also launched something that I found quite interesting, which is USD is fully fungible, right, across different stablecoin. Can you tell me more about this?
Yeah, I mean, our approach, like I said earlier, was just trying to make sure users have access to the assets they want, the crypto and digital assets they want. And when it comes to stablecoins, we're seeing this proliferation of stablecoins. There's obviously Tether being the market leader, and we work very closely with them. There's USDC, and we work very closely with them. And then there's new upcoming stablecoins like USDG and others that we're going to bring on platform. And we're seeing users look to use these stablecoins in different ways, right? Different stablecoins have different levels of acceptance in different parts of the world. Maybe there's yield, maybe there's DeFi opportunities, decentralized finance opportunities on chain that a particular stablecoin might have. And so when users come to our platform to access these stablecoins, we want to make sure it's very easy for them. And one of the ways, as you mentioned, is we built something what we call the unified dollar order book and unified dollar system, where stablecoins that meet this high bar of our vetting, regulation, and all that, we've made them fungible on platform. So basically, deposit one USDC, you can swap it to dollars at no cost, 1-to-1. You can swap it to USDG at no cost, 1-to-1, and then also use them as trading. Trade with USDC as if it's a US dollar. Really, again, abstracting out the complexity, making it more seamless and usable.
So this one I want to understand. So why is it hard to do? Why make it fungible? It's hard to do because they have different risk. Is it because the user doesn't feel it, but you are managing the risk that one may be pegged? Yeah.
So because issuers of stablecoins, they don't interact directly with a user, right? Yeah. There's no way for you to actually directly redeem your stablecoin. Let's say you have 10 USDC. You expect to get $10 back, but you can't, right? And so that onus comes to us to make sure we manage the relationships with the stablecoin issuers, make sure that the banking connectivity is solid. There's reserves, there's liquidity, but then also, again, like you said, right? If there's in case of a long tail event where there is a sort of pricing shift,
Silicon Valley Bank,
right? That was a prime example where USDC depegged as a result of the Silicon Valley Bank situation. And so that's on us to manage that and then make sure that those systems are in place to allow for that fungibility. And I'm not saying it's difficult. I'm just saying it took time to test, right? Like, again, these things have to work, right? And these things have to work at scale. And I think that's probably the biggest challenge.
So here, for a lot of things that you guys are working on in terms of innovation or product, it's not saying the thing's hard to do. It's more you have to make sure the thing just cannot fail, right? Like it's not 99.999, it's 99.9999999.
Exactly. That's
Effectively.
exactly right. And I think that's where the expectation for our industry is also increased, right?
Yeah.
Like this is not the wild wild west anymore.
Yeah.
These are actual systems and products that people are using and relying. This is they're powering their daily lives upon. So that's the expectation we set a bar for ourselves, and that's why it does take time to build and test out.
And you feel then OKX as an exchange now the role is becoming different, right? It's not really pure trading. It's most like a bank.
We rolled out a new marketing tagline called the New Money app. And so again, this is obviously more retail focused, but again, representing the fact that we expect crypto to be pervasive in daily lives. It'll be core to many people out, again, where they don't have access to some of these more sophisticated products we have today here. And so we fully expect our OKX experience to help solve all those pain points that users have throughout their daily lives, but also as they think about longer term financial decisions and activities. So yes, absolutely.
So that's quite interesting. So I think the trend, right? So I think I lost my job from TradFi in 2013. I think around the same time as you, I think, right?
Yeah, that's when I moved to do my startup.
The interesting thing, I think, at that point, a lot of people lost job in finance, went to fintech, right? And you have crypto and fintech. And now it feels like these two are converging. We have fintech businesses like PayPal trying to do crypto, and you guys crypto businesses trying to do fintech. So do you see these two are converging right now?
It's banking. So crypto companies are getting banking licenses.
Yep.
It's banks trying to issue stablecoins.
Yes.
It's fintechs trying to do a mix of both. Absolutely, that is the convergence that we're all seeing.
Isn't that ironical that ethos of crypto at the beginning is to get rid of the banks, and now suddenly you guys are becoming banks? Isn't that ironical?
I don't think it is actually. Yes, I can see where you're coming from. I think the key thing is that, and this is why I think I emphasized earlier that we try to offer increased access to crypto.
Yep.
Like I think there is this challenge still where I went to the bank yesterday and I asked them to send myself some money overseas.
Send yourself. So you
I'm just wiring
send your
some money
account
from
to yourself.
Hong Kong to the US.
Yep.
And, that was quite a painful
5
experience.
days?
Yeah.
Like how many
Days, but also just the questions they're asking, like, why? What is it for?
Yes.
I said it's
my
in
money.
my own name.
It's
in
my money.
And I think some of that legacy friction is still there, right?
Yep.
And I think for us, where we come from a fresh background and a fresh perspective on how money should act and how people should own and manage their funds, I think we offer that choice whereby you have an alternative. And I think that's the most important thing, is offering the users choice on how they want to manage the digital assets, whether they want to do so. I talked about self-custody. I think it's fundamental to what we offer is the ability to take your funds off our platform, right? We offer you the software to do so, but you are in control. I think making sure that option is available is very critical. And so I think even though we're converging, the approach is very different, right? And
so the other way is the way to put it is the way you position it. Technically, there shouldn't be a bank run, because you can always you can take away all your assets if you want to, if you wish to. As opposed to a bank, the moment if everybody take at the same time, you may have a bank run. That's a big difference, effectively.
Yeah, because of fractional reserve and banking. Yes, that's again a separate issue. But yes, I think in theory there should be no bank run for stablecoins either. But because the stablecoin reserves today are still held by banks, I think you haven't eliminated that risk. But I think there are new kinds of banks popping up in the US too, which are just purely no lending, right? So fully reserved, narrow bank. So I personally think that's great, right? We love to see this experimentation.
So it feels like now let's talk about stablecoin, because I think we've been dancing around the subject, right? But it feels like the reason you have the bank and crypto converging is because the product is stablecoin. That's really taking the market by storm, right? Everybody's talking stablecoin this year. 2025, I think, is a stablecoin year. So what have you seen so far in 2025? What are the use case people are most excited about for stablecoin?
I think as we speak, we're probably having stablecoins cross $300 billion worth out there. And I think even last year, Please double check my number. But in terms of payment activity,
issue. The
300 billion, the velocity is already
higher.
greater than say MasterCard or Visa networks, right?
Yes.
Again, it's not always clear what the use case is because you don't know, but you can see that trajectory of usage of stablecoins has picked up increasingly. And from our data, looking at our users, again, like I said, we have millions of users in many different countries, so we can kind of see where how users are using stablecoins. A lot of it, there are peer-to-peer payment type of activity. And then increasingly we're seeing companies and institutions also come to us for access to stablecoins, right? And so, one of the products that we discussed earlier, allowing for dollar and stablecoin fungibility, very easy access, free, cheap. We've seen institutions come to us for that too, right? And and I think some of these institutions are using it for cross-border settlement. So obviously for trade purposes, but settling their invoices overseas and things like that.
So they're actually doing global trade, but the infrastructure, instead of using Swift, the traditional rail, they come to you to use stablecoin and use this order book to facilitate the FX conversion.
Yeah. So no order book involved because we do the fungible swap for them. But yeah, basically they come to us, get the stablecoin, and then send it to their counterpart that will hopefully accept stablecoins.
Are you becoming is OKX sort of becoming an on-ramp or friend partner?
Oh, 100%. Yeah, 100%. Yeah. I mean, I don't. I think this is where we're exploring and hopefully building better products for that specific use case. But we are absolutely seeing that, and even actually even back in 2016 and 17 when we had OKLink, we've seen those inbound requests for this type of use case. It's just that the volumes, the amount of stable coins just wasn't quite there. The acceptance of stable coins wasn't quite there yet. But now, yeah, it's playing out.
So help me understand. Does that mean if technically OKX has a bank account where someone can use TradFi to send the money essentially on the traditional rail, you'll be RTGS, you'll be the local rail, so it's very fast. And then once you switch to stablecoin, then you get the cross-border. That's the use case that you guys are working on right now?
Yeah, that's exactly. That's one of the use cases that we're seeing.
Which geography?
So we're seeing a lot of activity in Brazil.
Okay.
We're seeing a lot of activity in the Middle East.
Yeah.
I see a lot of activity in Turkey also, but I don't know if that's for this use case specifically. Could be, it could be, right? So the other thing is, once you have the stablecoins, you can take it off our platform.
Yeah.
And we don't necessarily know
what
you're doing with it, right? You might just be holding on to it.
Yeah.
You want to store it somewhere else. So, but when clients do tell us, hey, look, this is what we're doing, that's where we're seeing some of that request.
Actually,
I mean, this is what you guys are hopefully working on too, right?
We just did a pilot with, hopefully it's public when the podcast published. I think it will be with the Central Bank of and the scenario is there's a payment between the over there and then here in Hong Kong. It's facilitate a payment linked to a shipment. So it's all in pilot technically, but does that make sense?
Okay.
Does that make
sense?
So
the payment is between the two banks themselves.
Correct. Okay. So I'm a user, I'm in the bank, but then the product itself is not stablecoin, it's tokenized deposit, right? But the idea is effectively you can have an instantaneous payment between two jurisdictions. In this situation, there's actually FX transfer because I think here is HKD, over there is a so there's FX that's happening, but it's fully instantaneous and it's linked to the transfer title on the EBL product that we're working on.
I think that's the cool thing, right? Is the programmability allows for
you can do more scenarios, more things. More complicated,
But where does the stablecoin come into play in that?
There's no stablecoin. But to me, stablecoin, tokenized deposit, CBDC, it's different shades of the same product in my mind. Sure. My mental model, right?
Yeah.
Okay, cool. And then can you talk a bit more about the market players? So you mentioned, right, USDT, USDC, and then USDG. So how people understand a bit more, like who are those companies, what's specific of them, what's their unique strength, and how do you see them, but how they actually will grow in your opinion at least?
Yeah, so today the market is dominated by a handful of key players, Tether being the largest. They issue a stablecoin called USDT. I think it's probably 70% maybe of the total market. And then there's Circle with USDC. And then there's a tail of upcoming smaller ones. USDG we talked about. There's Ripple with their stablecoin. PayPal has a stablecoin. There are new ones that are coming up almost weekly, right? Cloudflare announced one.
Oh, really?
Stripe.
Yeah, Stripe.
So anyways, these three are similar in the sense that they are all reserve backed, right?
Yep.
Depending on the framework that they issue out of,
Yep.
they may or may not be regulated.
Yep.
I think even in the US, where we did have the Genius Act passed recently,
Yep.
it doesn't go into force for 3 years.
What details need to be figured out? What details we're talking about?
Details like when you go to inspect reserves, like who does it, how do they do it,
yes.
Is it quarterly, is it by, like,
Got it.
like the actual regulation is
So
not
the
written yet.
rules of what asset to hold, the maturity, the redemption process, all those has been defined correctly, but the actual regulations
they've been defined in law, right?
law,
but
yeah.
the practical interpretation of the law has not occurred yet.
Okay.
And so even today, the Treasury is out seeking comments from industry on
How we implement
right,
this?
how does this work, right? Like, how does it work today, and how do we implement it? One other example is there's a talk of the reciprocity in the bill, which means the U.S. will recognize a stablecoin issued out of another jurisdiction that's substantially similar. What does that mean?
Yeah.
Right? Like, practically, what does that mean? Does that mean Singapore's in play? Does that mean Hong Kong's in play?
Yeah.
We don't know.
Yeah.
And so, again, there's requests for comments out there to see how that will play out. And, this is an evolving regulatory space where, Hong Kong just came out with a framework. Singapore is finalizing theirs, taking some of the genius things into play, right?
I think it's very clear the US is going to be leading this market. I think for sure.
Well, yeah, I mean, the dollar stablecoin market is
going to be leading by them anyway.
90 something percent.
So let's start with USDT.
Yeah.
So USDT, I think, as we said before, started 2014, had kind of a slightly rocky past. Like a lot of people on the internet keep questioning, do they have the reserve, don't have the reserve? But they managed to survive for 11 years. And I think the longevity is kind of a running joke, right? Everybody believes USDT don't have the reserve, but I think by this time, they probably have the reserve. So what's your view?
Yeah, I think crypto, obviously, earlier days was, I think it was harder to get transparent information. There was also harder to get, harder to match up with expectations, right? Regulatory wise. And so, yeah, I think there was a lot of questions about that. But, we've been supporting USDT for, I don't know, eight years now already.
Yep.
And we've never had issues on that front. What is interesting is that, it's really become the dominant stablecoin, just in terms of awareness and acceptance globally. Even down here in Causeway Bay, by our office, there's a money changer that has a huge USDT sign.
Oh, really?
Yeah, buy and sell USDT here. Like, so, yeah, it's ingrained in sort of daily life now, right?
To interpret, but also in GSBN, the trade space, they also not dominant, but the leading capital provider for trade finance or supply chain finance.
They provide lending and liquidity.
Correct,
right?
because they have so much reserve to put to play. I think Circle is more conservative, but I think Tether, they have maybe 85% it's treasury and 50% where they does God knows what, which has the most yield compared to the other 85%. And one of them actually they do a lot of supply chain finance. So to me that's how I know those guys kind of in this space, at least in global trade.
Yeah, I mean, I think it's part of the way they expand their network and acceptance of Tether is pretty interesting. But it's also, like I mentioned earlier, it's been a 10+ year journey for them. And they deservedly, working through all those challenges over the years.
It's also a very small company, right? I think there's like 200 people or something, right?
Yeah, something maybe even less than 200. Yeah.
They way more profitable than any of the banks or
per employee, probably.
Yeah. Okay.
Yeah.
So,
but we're entering a declining rate environment now.
That's true.
We'll see. We'll see how things change.
That's true.
And also, we were, for most of Tether's years, it was also a zero rate environment.
Yep.
So, things can change in crypto, like I said.
Yeah.
And we'll see how they adapt and play out. I'm very confident in how they're able to manage that. Circle just IPO'd earlier this year, really leading the market in building out that type of company and exposure. And again, they're also doing a layer one of their own called ARC, which is very exciting. We see a lot of acceptance of USDC. So they position themselves as regulated, compliant stablecoin. I think that's it depends on what that means, but there are a lot of players that are regulated and compliant also.
Yeah.
But certainly they are the number 2 player.
Yeah.
The Circle as a company has been around since 2013,
Yeah.
2012, 2013. So one of the OG companies in the crypto space too.
And the relationship with Coinbase, does that impact how work with you guys, or it doesn't affect us?
No, I mean we work closely with Coinbase also, right? Like
Sure.
I think for us we're market neutral. We try to support what our users want access to.
Okay.
And so yeah, again, we work very closely with a wide
Got it.
range of stablecoin issuers. And then lastly, I think you mentioned USDG.
USDG, yeah. That's the most interesting to me.
Yeah, I mean it's similar to you guys, right? It's a
Yeah.
consortium-based model.
Yeah.
They try to align incentives and economics such that you help grow the network. You use the USDG a little bit more, you get a better share.
So people may not understand what you mean by incentive model, right? So the way a stablecoin makes money is they have all those dollar reserve and they earn interest on that, right? In the case of Tether, they keep all the interest. That's how they're so profitable. Circle give back some of the money to Coinbase, right? But USDG, the way they set up is this reward, they just give it back to the consortium member. Is my understanding correct? Is that
correct,
how,
yeah.
is that how they design, right? So then the innovation from that aspect is more, can we use economics and then the incentive to drive more adoption to grab more people coming in, right?
Right.
That's the design.
Yeah.
What do you think? Like you
Yeah,
guys remember, you just joined, right?
we're a core member of the USDG or Global Dollar Network Consortium, and it's been great. Like we get to work with other partners. Robinhood's in the consortium, Paxos, Kraken. There's I think 80 plus different partners now.
Yeah, that's been growing really fast, right? I think it started like last year, November or December last year.
9 months in. But look, I think from our perspective is we want to support the assets that our customers want access to at the end of the day.
So you don't really care which one wins.
It's not that we don't, obviously we want to see more stablecoins out there. We want to see more people use crypto. We want to see all these products that are built on top of stablecoins come out.
Yeah.
Including some of the ones we talked about, Pay and Earn and all these things. So yeah, it's very critical for us to make sure that we're supportive of issuers, existing issuers, and new issuers.
Do you think we're going in a world of like thousands of stablecoin, or it's going to be few?
I think we will see a moment in time where we have 1,000 stablecoins.
Really?
I don't think we'll end in the
For sure.
Yeah.
For sure.
So I don't know.
Is it that cheap to build a stablecoin? Like if tomorrow so
you
if you
guys
want to Jason,
you guys could do one too.
if you want to Jason Lau stablecoin, it's very like how much will it cost to set up a Jason Lau stablecoin?
I think with Bridge, for example, has a product that.
So Bridge is a company that acquired by Stripe.
Yeah, they have some stablecoin issuance infrastructure. You could probably spin one up, and I think they just take a cut of your net interest margin.
So it's almost like a cloud type of thing, right? So it's basically back in 2006, 2007, and you started in a stock and just subscribe to it with the one credit card, and they provide the infrastructure that scales for this. So is that what you're saying?
It's cloud is a good example. Probably Stripe and their sort of payment stack is a good example.
Yeah.
Where you don't need to deal with that, you just let someone else deal with it.
So there's a technical aspect. There's also a compliance, right? So these two, the thing that's most painful.
Right.
Okay. But then if let's say take an example, Jason Lau stablecoin, you want to create that. Don't you also have to do KYC and vet who mint the stablecoin, or that doesn't matter? That's you offload that to the partner who's doing that.
Partner would do it. Yeah.
So
they are the issuer. They are the issuer. In this example, I'm not the issuer.
I see.
I'm just the
you just put your face on the
marketer.
coin. You're putting your face on the coin, but they're actually ultimately vetting the user. Yeah. Oh, I see.
Right. So currently, regulation is such that at the point of mint and redemption,
there's a check.
That's the KYC check, right? Like you can't mint and redeem but once it's done, it's a bearer instrument.
So you can send to whoever.
It's like cash.
There's no
it's like
KYC.
cash, right? It's like cash. You go back to the bank and you try to convert your cash. Bank is going to ask you who you are, but a peer-to-peer transaction like this, that's on us.
I guess there's some debate about how for USDC, technically, if US Treasury comes and says, I want to blacklist those wallets, they can just shut down those wallets, which becomes technically slightly different than the traditional vision of this completely
I think
fully control.
To be clear, almost all stablecoin issuers today abide by sanctions.
Got it.
Right? Sanctions and also fraud and all the things. One example would be, we have a few examples, but a couple years ago, us working with Secret Service, with Tether, analysis, we identified a pocket of activity that was related to pig butchering scams in Southeast Asia.
Oh, wow. Okay.
And so obviously you got to make sure you identify and then validate, right?
Yep.
But after all that was done, Tether froze $200 million worth of illicit funds that these scammers were using. And so that was, DOJ published that and, gave thanks to all the players that were involved. That's an example whereby, yes, stablecoins are obviously there's an element of control there, right? You're trusting the issuer
to make money.
Good. There's another side of stablecoins which are algorithmic, which means it's not backed by a reserve, it's backed by some sort of program that arbitrages or does things to try to maintain a peg. There's other elements that
that doesn't do too well, I think.
There's one called Athena USDE that's maybe 13 billion maybe out there.
Well, to me, I think there's three models that I know of. There's the algorithm which is mentioned, still to be proven. I'm not saying Athena is a fraud, but still to be proven, because I think
Athena is not necessarily algorithmic in the sense that there's no intervention or interaction, right? You trust the rules that it's been set up upon, and then it's supposed to run, right?
Yeah. It's sort of the self-perpetual machine that you have to believe the thing will work. So I think, to me, still hasn't been proven that it works. The second one is fully reserved, so the USDT, USDC, and then the other one's over collateralized. So
that's another way. Yeah, there might be different discounts in terms of collateral recognition on our platform.
You may not put that in the unified trading,
or even just for margin, right? Like how much would you recognize that as the value of that? So they may change based on our risk assessment, but I think it's good for people to experiment and provide that choice.
How about the geography focus? So I think we mentioned US is clearly leading the way with Genius Act, but there's some other jurisdictions. I think you mentioned a couple. You mentioned UAE, you mentioned Singapore, you mentioned Hong Kong. Just FYI, we ran a workshop in Singapore, and we asked people doing token California with some of members, some FinTechs, some banks, like which location you will you think that the stablecoin will take off and adoption, right? And unsurprisingly enough, a lot of people pick US for sure. Yeah. But the number 2 was Hong Kong.
Hong Kong, okay.
And number 3 is UAE. And the funny thing is, we was in Singapore. Nobody picked Singapore because that gel with what in the mental model you have in terms of the growth you see the next 24 months, say, of stablecoin. Which location you expect a lot of activity by builders, by fintech, people to drive the adoption of the stablecoin?
You mean building stablecoins into their product suite? And
correct. Focusing on that as a core product.
Yeah, we've seen a lot of chatter, and we've been involved in a bunch of that in the UAE in particular. I think they're a little farther ahead, perhaps, maybe in terms of their stablecoin framework readiness. Hong Kong, I don't think actually comes into force until January next year. I think we are just in a moment in time whereby people are, rightfully so, going to react to how the Genius Act plays out. As we discussed, it's quite a tremendous change and pickup. Like banks are clamoring to issue stablecoins. You have Amazon's issuing a stablecoin, right? Like everyone's gonna have a stablecoin, and we're all gonna try to figure out why do we need a stablecoin? How do we deal with all this, right? And so it remains to be seen how other countries react. Europe actually was the first to issue regulation around this, but I think some of the again, it's.
I think Europe is probably the case example where I think they're gonna be really behind the curve, in my opinion. I think USD stablecoin is gonna eat everything, because I think in Europe, the people will want to put to work the assets, and they have an escape hatch, which is the USD stablecoin. I actually personally think some of the country potentially will start to institute like money control, meaning if you don't want your currency to be completely completely flow away to some other jurisdiction, you will want to install like capital control, which I think sounds crazy, right? Capital control hasn't happened since like maybe 100 years, right?
It's in Europe?
In Europe, like back in terms of case of war. But I think if some of the country don't react, I think this is literally what can happen, because I think the USDC as a product be just not USDC, the USD stablecoin as a product is just too attractive, too good. And then if also you combine that with the ability to invest in stocks, US stocks, and having completely new product, like financial innovation, then Europe is going to be like left behind. I don't know if you know the statistic, but I think last week. London Stock Exchange, now IPO. Guess where they sit in the league table?
I have no idea.
They're not even top 10. They're not even top 20. So they're below Mexico. So there's like a super shocking headline from Bloomberg where they say London's below top 20. So that's, I think, what's waiting for Europe, right? So I think stablecoin, I think US definitely. Second one, probably UAE. Hong Kong, it remains to be seen. And I think Singapore, my feeling is the MS is not really pushing that much for it. It feels like. I don't know, what's your feeling when you were in the ground last week?
I think there's a balanced sort of approach. I think, again, people are waiting to see how things play out. I think there's appetite for experimentation. Fundamentally, I think Hong Kong and Singapore are very different places. So we'll see. I think it's an exciting time to kind of see how this plays out.
The thing also you mentioned earlier about Stripe and Bridge with Tempo and Circle with Arc. So just for the folks to understand, stablecoin is a product you use, and below it is a blockchain, right? So traditionally of the stablecoin, the Tether, the Circle, were deploying like, I don't know, 15, 20 different blockchain, and they are interchangeable, interoperability between different underlying blockchain. But now some of the newly minted stablecoin issuer, they say, you know what, we're not going to use Ethereum, for instance, or Solana. We're going to build our own L1, because this L1, we're fully in control of the product roadmap, the trade-off decision, and what's your view? So I can imagine that 1,000 stablecoin, but are you going to have 1,000 L1 also to provide this?
Well, today we already support over 120 different networks, right?
Blockchain
networks on our platform and wallet. And so we will almost certainly support new use cases. And we actually love to see that, right? I think
why do you love more blockchain? Isn't that harder for people to adopt if you have so many choices, you don't know what to choose?
So yes, but also we're in this phase where crypto blockchains, technology-wise, we're still experimenting and seeing how this plays out, right? Yeah. If it's app-specific or use case-specific blockchain, great. Let's see how that plays out and see if you can build a new experience that works better. That to us is fundamental to the value we bring, which is allowing people to access this landscape of networks and crypto assets and all that. We hope that we can help bridge the liquidity between these blockchains. We hope that we can provide the software tools such that people can very seamlessly choose and move assets and use the different networks. For example, our OKX wallet today, we launched it. This is our self-custodial wallet product. We launched it almost 3 years ago now, but with the singular focus where we identified that there were all these new networks popping up, and you had to download one wallet for a different network at that time. And so we built it with that singular focus of interoperability in mind. And so that's really taken off. Like that's been a core sort of value that customers have really appreciated. And that extends to our exchange, that extends to our tech stack.
Sounds like basically go back to what you say about the mission of OKX, which is you want to drive adoption of crypto, and crypto is going to be very complicated. So for the 90% people who haven't touched crypto today, still, when they adopt
I think it's less than 90 now.
Okay, 85%, 80%?
Maybe.
Okay, 80% people, you want the first experience to be as seamless as possible, where they don't have to deal with all this complexity, right?
100%, yeah, 100%. I mean, even today, a typical user in Brazil, for example, would come on and just buy stablecoins. Yeah. That's their initial end state. Like they've reached.
That's the adoption of crypto.
Well, but that's a critical adoption because they can't get dollars otherwise.
That solved the key problem.
Literally solved the key problem, and now we're allowing them to pay with those dollars and use it. Like I think that's very game changing for them already.
Okay.
So again, it just depends on the market.
So we talk about stablecoin at length, right? But stablecoin is just to make a payment, which I think it's a nice use case, right? But it's not I think the most exciting use case for a lot of people. The idea is, can you transform commerce interaction, both money and transfer of value, right? I think that's really the next layer of innovation. So talk me more what you think of real world asset tokenization. Second thing you mentioned already about TradFi. The meme is the finance as we know it would be completely changed, right? So everything become crypto-like or digital-like. And another thing that personally we think actually is quite interesting that not enough people are talking about is trade finance, right? Globally, on a yearly basis, you have 30 trillion of trade flows, and that's still based on paper and using Swift payment, which is completely archaic. So what's your view on those three areas of growth potentially?
I mean, I fundamentally agree with all three. I think it's inevitable. Real world assets today, stablecoins are the vast majority of real world assets that are issued on chain today. But we're seeing, money market funds from BlackRock and Franklin Templeton. We're seeing equities, that are now being issued. I think it's exciting. More importantly, having assets be more easily available for a global audience is a trend that we're seeing. And digital, obviously being that great equalizer in terms of access, is enabling sort of these assets. I think more interestingly, at least for me, is that yes, real world assets, moving them, making them digital, putting them on chain, great. But over time, we're going to see digital native assets that are going to be fundamental to either maybe less so to humans on a tangible basis, but to the AI agentic economy and all that stuff. We're going to see a lot of these sort of digital only economies pop up, and inevitably they're going to be interacting with digital assets natively.
So talk to me a bit about this. I think Google just announced last month the introduction of the AP2 standards, which I think is agent payment. So when you say digital asset and AI agent, what do you have in mind? How the use case actually look like?
This is fast evolving space, right? Yeah. Like one thing we see is that you've been playing with these AI agents and things like that, where today they kind of respond to you and maybe they take your instructions and do stuff, but really the fundamental way to think about it is, what if they had the ability to own assets and interact and pay for things, right? Yep. That's really the core of it. Yep. And so different companies are building out standards so that agents can, in a standardized way, communicate and pay with each other. We've seen experiments whereby, I think one actually used our OKX wallet technology so they could hold crypto assets. They might go and try trade and do something. Yeah. I think we're early stages. Yeah. But fundamentally, once you have that ability for AI agents or digital agents or bots or whatever to do commerce with each other without human interaction, they are going to be building up products and tools for themselves too, right? And there will be digital native assets that will spring up as a result.
Yeah, and I agree 100% with that. I think for me personally, I think the TradFi, the finance tokenization is an overplayed trope. Because back in the days when both of us were in finance, the financial market is pretty digitized already, right? And making more digitized doesn't really solve the inherent problem, which is you only have that many people who you want them to invest. Because if you make finance more accessible to mom and pops, they're just going to lose their shirt buying stuff that they shouldn't be buying. I think we disagree on this one.
I disagree on that. I disagree on that.
Yeah. But anyway, so getting more people to be able to buy things, I think may not be creating as much value. However, I think the AI agents, I agree 100%. Number one is because the payment is so cheap, you can have a lot of microtransaction, right? Which is not possible in the traditional realm. The second thing, which I think is more interesting also, is it's also changing the monetization of internet, in the sense that the internet we experienced last 20 years is built on Google monetizing ads and having people populating so many websites. But in the era where everything is ChatGPT driven, the key question is, why do you need to build a website to say things? Because the AI will just scrape the website and your information will go into the model, and you don't get paid anything. And there's nothing at scale to reward websites for creating the content. In that space, actually, if you can have a new way to reward people to the ChatGPT, to the AI model, which is not driven by ads, which is not driven by the intimidation created by Google, that's quite important. And I think that's the reason. I think now I recall the thing you said about Cloudflare, starting Stablecoin, I think it's exactly for this use case, with the belief that in order to maintain the saturation of internet, having so many websites creating content, they need to get paid. And the only way to pay them at scale with agents parsing the content of the website is actually to Stablecoin. There's no other way to do that.
Absolutely, yeah. So I think it's early, right?
Yeah.
And we'll see how this plays out. I think digital assets it's very clear, at least to me, that they are going to be absolutely critical for this next phase of the internet, right? And so at the end of the day, we're in this transition phase, and it'll take maybe decades, I don't know. Yeah. But hopefully we have that ability to help generate more access and adoption.
Yeah. But one thing I think that's difficult we see on our side, right, is to drive adoption, you need to onboard people, right? So to onboard people on electronic bill of lading is one thing, but onboarding people to Stablecoin is completely different ball game, right? So trade is global, right? So potentially you have someone in Nigeria trading with someone in Shenzhen in China, and different jurisdiction will adopt stablecoin, will choose not to adopt stablecoin. Right? So then how do you actually onboard these groups? So what's your new view from OKX perspective? How do you onboard mobile user? What's your onboarding strategy for more corporate than retail?
We focus on, so there's a few layers to that, right? One is making sure, like I said earlier, we have to make sure that the actual product use, which is, connecting, well, one, signing up, and then two, connecting your bank account, making sure the money that flows over is seamless. That requires a lot of work with regulators and with banking partners, right?
Yeah.
So that's the connectivity to the traditional finance landscape is still, especially as we play this out
That's a
over
bottleneck. That's a
100
bottleneck,
different
right?
countries. Yeah, that's still a bottleneck. And I think it will take some time, like you said, for even just that piece to get smoothed out.
Yeah.
Then it's like, okay, now that you can send us money, how do we make sure that you can get the stable coins you want that maybe your trading partner accept? That I think we have a better handle on. And I think by the time, we smooth all that out, I think that's pretty straightforward. So it's a combination of the end-to-end flows, just making sure it works, number one. And then two is marketing that. Yeah. We're already getting a lot of inbound. You see, I think people are like, well, how can I try it? Like, why not? To be fair, I think more so the challenge is outside our control a little bit, which is, does your invoicing system recognize that? Does the rest of your accounting stuff do that? Does the rest of your team recognize that?
I think there's two questions, right? You're right. One is ERP, your system will recognize that, which is more technological. Second one is regulatory, meaning if my accountant check my books, do they recognize the stablecoin ledger? Is that same as USD cash or not?
Fair, yeah.
Right? Is the guy from EY, Deloitte, they recognize that? And which today I think it's a big question mark. Let's just play it out very simply, right? So I have to close my book at the end of the year. I need to hire my auditor to check the books. First question is, the stablecoin, the magic internal money that I have somewhere, is that same as cash or not?
Which bucket is it?
Which bucket is it? Right?
I think if we revisit this question in even less than a year, I think we will have
this will be resolved.
To me, this is a problem that is not going to be a problem very soon. Even CFTC is looking to recognize stablecoins as collateral.
Right? Oh wow! Okay.
So I mean, it's being talked at or discussed in pretty wide variety of spaces.
Yeah. So basically, you think in 12 months, this is
cash equivalent.
Cash equivalent is not different.
Tether's issuing a U.S. regulated stablecoin.
Oh, okay, already.
Yeah, they will. Yeah. Okay. They worked with. I think it's coming out later this year.
Okay, cool. Okay, so there's another thing that's also quite interesting is the difference between tokenized deposit, CBDC, and stablecoin, right? So first off, my understanding for someone who's not in the crypto world, CBDC is purely central bank credit, right? Tokenized deposit is the credit of commercial bank, which is again not linked to the central bank. And stablecoin is private money, private company who technically is not a bank even to issue that, and the liability of the stablecoin issuer, right? So you have three forms. People say a fear of stablecoin is if you move money away from the commercial bank or the banks in general to stablecoin, you move from a fractional reserve banking to a fully reserved, right? Which naturally would mean you're gonna diminish the amount of credit out there, which is gonna put a big compression. And that's my understanding why across all the jurisdiction being in US, like Hong Kong, it's a very simple thing. They say you cannot pay yield on stablecoin. Because the moment you say stablecoin can pay yield automatically, there's really no reason to keep your money in the bank account. So first question in this area, how do you see the bank reacting to it? So should the bank just move full force on tokenized deposit? How do you see that, both in US and in this region and in the Middle East?
Yeah, so in the US, with the Genius passing, there was a provision that said issuers cannot pass on yield directly to end users. But at the end of the day, we are looking at it from a user perspective, right? Should users get access to yield on their dollar? What do you think?
No, of course.
Of course, right? Like, why would that even be a thing? No. Why is that? And if you choose and want to not get yield on it, okay, go back to the bank, right? Like, that's okay. Again, I think it's just fun thinking from sort of real core pain points from a user perspective is, of course you should get your yield. Why would you not, right? Of course you should be able to hold on to your assets. Of course you should be able to transfer money to yourself if you want to.
But okay, let's play this out. But don't you think if we really play the stablecoin wave, let's say just in US, don't focus on Europe, UAE or Hong Kong, wouldn't that mean the death of all the medium-sized like local bank, regional banks? Logical path will happen in US if...
Well, so to to clarify on your first explanation,
Sure.
banks can also issue stablecoins, right? Like that actually is permissible by the Genius Act. Actually, on a federal level, the OCC regulates stablecoin issuers, and you have to get the bank.
So you think that we may see a consortium of bank issuing stablecoin to
very
compete?
likely so, yeah. And you'll capture
JP
that.
City probably.
But I think we are at an era where there is obviously more choice to users and consumers and retail, and therefore the ability for people like you and me and everyone to capture and get access to yield is increasing. Business models will change, and I think there will be some disruption, but I think it's for the benefit for all of us, right?
So the days of having money in the saving account and earning zero, that's basically behind us.
Yeah, and frankly, I it's a bit weird to have that in the first place, right? Even today, you could have moved your funds to money market funds, but there are so many frictions built in to prevent that. But yeah, I think the model is that we will get paid more frequently in more real time because it's digital, right? You can just stream payments. You'll earn yield immediately, and you'll stop earning yield the moment you decide to spend the money and it gets out of your control, right? I think that's where we're heading for sure.
I think when we started in Fine, I think we started around 2003, right? 2003, 2004.
Yeah, something like that, yeah.
And the idea was we missed the dot-com bubble. And then now the crypto is like, everything has been invented, stablecoin. But I think first I want to see if you agree with me or not. I actually think the next 10, 20 years is very exciting because a lot of things has to change. And there's a lot of forcing function for change. So if you had an advice to give someone who's starting to which area in crypto or in stablecoin or wherever you think is the most interesting time is to actually spend one's time or energy.
We see a lot of people still looking to join our industry. I think there's still a lot of room to grow. We're at this early stage where that sort of pushback and skepticism is now fading, which enables, I think, more responsible products to be built. I think there's obviously in the past we've had incidents that have sort of marred crypto's reputation. But I think if you're new and you want to have the ability to shape and impact and make impact, crypto's still a great place to be. Obviously, we're now layering into things like AI and other areas, but this trend is definitely going to be continuing. So yeah, I would welcome anyone to come, maybe even apply for a job at OKX.
Do you think you qualify for the job in the sense that situation gets more and more complicated? In the early days, you can get anyone who joined the economic class. But now you're saying it's like the barrier to entry is higher and higher because you have more people who want to compete and get in. Do you feel like that's the direction it's going, where you have to be like very highly qualified to do crypto these days compared to, let's say, 5-6 years ago?
Mostly because I see the quality of people we hire, and I'm always impressed by our new joiners.
Would you hire yourself?
Maybe. I don't know. I think look, it's there's experience, but there's also having that attitude where, crypto, like we talked about, crypto swings up and down. There's a lot of changes. It's a pretty fast changing industry.
So you're saying mental toughness is important. You have to have experienced the up and down to withstand the...
So I think that's part of it, right? Like you kind of have to have seen and be a little jaded, at least for me, seen a bunch of things. And, it's the technology is not impacted necessarily by the ups and downs, or price, for example. And if you zoom out and kind of see the adoption play out, back to when we talked about, we are literally seeing some of the things that was just a dream back in 2013, 2012. It doesn't play out the exact same way, but yeah, people are actually using this technology for some of the reasons that people dreamt up of, and that's pretty exciting.
So you've been in OKX for 10 years, right? And you said earlier that the joke is 1 year is equal to 7 years. So that means you're 70 years in this industry.
Yeah.
So when are you retiring? Like to retire and to some beach somewhere to spend hard-earned crypto?
Well, luckily, the space is also really fun, right? It's pretty awesome that, we've been doing different things, but yet there is still this ability for us to interact through, hopefully, stablecoin support. And as crypto sort of seeps into other industries, our role as a company keeps on changing. And I think that's part of what keeps me excited every day.
So basically, keep doing new things.
Yeah, why not? I mean, if we can, why not?
Thanks for your time.
Thank you. Thanks for having me.